Hello and welcome to Unacademy IAS, a one-stop destination for all the English medium civil services aspirants. In this episode of Economy This Week, we are going to cover current affairs articles on the subject Indian economy from different newspapers from 9th to 15th April 2026. The discussion will be comprehensive, helping you answer the questions from prelims as well as mains perspective. If you're liking the initiative, do not forget to hit the like button. And if you're yet to join the Unacademy IAS English YouTube channel, kindly do it right now. Before I start the session, here is a very important announcement. Right now, the Unacademy IAS courses are available at a discounted price of 19,999. Once you enroll, you get access to the live as well as recorded lectures, prelims as well as mains test series, the right reading material, the You Can Current Affairs Initiative, etc. Those interested in enrolling, check out the details by clicking on the link provided in the description below. And whatever is the price mentioned in the website, use the code IAS English to avail the discount. Let me begin the discussion. First important article: RBI mandates faster credit of inward remittances. What are the important points? Let's analyze. Point number one: India is the largest inward recipient of remittances. What do I mean by this? India receives the huge amount of dollars in the form of remittances. In the last couple of years, it has been over $100 billion. In fact, it has crossed 125 to 130 billion dollars according to the latest figures. So in terms of ranking, India is the largest in terms of receiving the inward remittances. Second largest generally is China. These remittances, when they come into India, it will go to a lot of households. The households will receive this money and use it for purchasing goods and services in the market, investment, etc. But the Reserve Bank of India has found something very interesting which is holding back the remittances being credited into the account holder. What do I mean by this? Let me give you a simple explanation here. Let's say there is an individual A present in USA. They will earn certain amount of money. They will send the remittances to, right? Let's assume the parent B, spouse, parent, whatever it is. So the money will be sent to the account of B. But these dollars, right? These dollars, when the money is sent, immediately is not credited into the bank account of B. Generally, they will basically fall into the Nostro accounts of the bank. From this particular Nostro account of the bank, the money will be cleared and then credited into the account of person B. Everybody is okay with this? Very simple process. Right now, if I transfer money into your account, right, the transfer will be almost immediate. But in this particular case, when the inward remittances will come like this, the money will first fall into the Nostro account of the bank, and then the money will be cleared to be transferred into B's account. RBI simply says it generally takes certain amount of time. And why does it take certain amount of time? RBI has observed that lot of these particular banks, they do not clear the amount that is falling into their Nostro account in periodic basis. They do not clear, right, within short time period. Generally, they clear these particular transaction at the end of the day, at the end of the working day. And because they're clearing, right, basically they will have to reconcile the transaction, then transfer the money, etc. Because they are doing all of this at the end of the day, the money is not getting credited into the account of the beneficiary very quickly. So the two very important reforms that the Reserve Bank of India now has mandated, announced that the banks must follow going forward is one. Let's say A has transferred money into the account of B, inward remittances, not domestic transfer, inward remittances. Once the bank will receive this particular money into its Nostro account, once it receives the money, the message has to be sent, information has to be sent to the receiver. that is the recipient. In this particular case, B is the recipient. B is supposed to receive the money. So the message has to be sent, or the message has to be conveyed to B, saying that you have received the remittance. Point number one. Point number two, RBI has mandated now, going forward, that the banks must reconcile and transfer the funds not at the end of the day, but periodically. Within the working day, the RBI has mandated now the transfer has to be done, or reconciliation and the transfer into the recipient accounts of this money has to be done, right, for every hour, at least in an hour. The gap for reconciling and transferring the money should not be more than 1 hour. This will ensure that, one, the recipient realizes the funds have come, and second, in a very short duration, the funds will be transferred into the recipient's account. Right? So these are the two very important changes that the Reserve Bank of India has announced in the context of inward remittances. Now let's solve a question associated with this article. Consider the following statements. India is the top recipient of inward remittances in the world. Currently, yes, this statement is true. Second, ceteris paribus, with the higher forex reserves, the import cover also rises. Now, let me explain what is the idea here. Right? There's a space here. Let me explain. The basic idea is import cover. Import cover simply refers to how many months of imports you can continue to import using the amount of forex reserves. Right? How many amount of, or how many months of imports can you receive using the forex reserves that you have? Right? Let's assume the forex reserves that India has, assumption by the way, just hypothetical situation, is $100 billion, and your monthly imports are $25 billion. So the import cover will be 4 months. Import cover will be 4 months. So the statement is ceteris paribus. Ceteris paribus simply means if everything else remains the same, unchanged. Ceteris paribus, if the forex reserves increase, will the import cover increase? Answer is yes, by the way. So second statement is correct. First statement is also correct. Right option. It is option C, both of the statement. So this is article number 1. Let's move on to the second article. RBI issues draft NBFC upper layer review. What is the basic idea? Back in the year 2021, RBI introduced, rather than introduction, I'll say RBI proposed. RBI proposed a mechanism called as scale-based review. Scale-based review. This particular mechanism or framework came into force from 2022. Now, what is the basic idea? We have banks, we have non-banking financial companies, that is banks and NBFCs. The Reserve Bank of India has very strict regulation over the banking sector. The same kind of strict regulation, underline the term, the same kind of strict regulation is not applicable or was not applicable for the NBFCs. But the argument of RBI is that NBFCs also handle money. NBFCs, right, will also be involved in similar activities, not the same, similar activities like a bank. So if the banks can be regulated in a very stringent manner, why not impose similar regulations over the NBFCs as well? Because if the bank will fail, it will have a larger impact on the financial market. Same kind of impact will also be felt if the NBFC fails. So the argument was similar regulation should be imposed even on the NBFCs. And that actually led to this scale-based regulation framework. Scale-based regulation framework, SBR. Initially, it was proposed in 2021. It has come into force from 2022. Under this, what the RBI proposes is very simple. Scale here basically refers to size, the size of the NBFCs. So the NBFCs have been classified into 4 categories. One is the base layer. Above base, we have middle layer. Above middle, you have upper layer. And finally, you have top layer. Base, middle, upper and top layer. Now, increasingly, as you keep on moving upwards, the importance of the NBFC will keep on increasing. And because the importance of this NBFC, and when I say NBFC is important, please look at its size. Look at the assets that it is holding, etc. For example, the Reserve Bank of India, by default, the top 10 NBFCs were classified under upper layer category. Because these are very large NBFCs, if something happens to these NBFCs, automatically the implication or the impact on the whole financial market will be much larger. So obviously, the size or the importance or the asset value of these NBFCs would be much higher as you keep on moving from the bottom of the, right, let's say pyramid, when you move to the top of the pyramid. Reserve Bank of India classified the NBFCs into these categories. Top layer has been kept vacant. As you keep on moving upwards, like I said, the size increases, the importance of the NBFC increases, so is the regulation. So is the regulation imposed by RBI on the top layer NBFC, on the upper layer NBFCs. Right now, there are 15 NBFCs in the upper layer. And how do they generally be kept under the upper layer? RBI simply says the top 10 anyways will be in the upper layer. In addition to that, RBI also uses a certain parameter or formula or a parameter where qualitative as well as quantitative parameters are used to identify the upper layer NBFCs. And once you're classified, right, from the base layer to the upper layer, I said regulations will also keep on becoming much more stricter. For example, once you're classified as the upper layer NBFC, the RBI simply imposes bank-like regulation. Bank-like regulation. For example, you'll have to meet capital adequacy requirement regulations. You'll have to meet listing regulation. There are regulations regarding, right, let's say, putting the documents, maintaining transparency by publishing documents in the public domain, etc. So this is basically the scale-based regulation that has been announced and implemented by Reserve Bank of India. Now, what is the RBI proposing? RBI is simply proposing to review one of the layer. That is the upper layer the RBI wants to review. What do I mean by review? Right now, the NBFCs which are owned by the government of India, they are either part of middle layer or part of base layer. The Reserve Bank of India now wants to change the mechanism to identify the upper layer from having these kind of formulas, etc., to simply using the asset size of 1 lakh crore rupees. Asset size of 1 lakh crore rupees. Any NBFC which has an asset size of 1 lakh crore rupees now will be classified as an upper layer NBFC. This might even bring the government owned NBFCs into the upper layer category now. So these are the important points associated with the proposal that has been put forward by Reserve Bank of India. Consider the following statements. The scale-based regulation has been implemented by RBI in the year 2010. Incorrect statement. The largest NBFCs are classified under the top layer under the scale-based regulation. Right now, top layer has not been activated. It is upper layer. Right? The top 15 NBFCs are in the upper layer. Second one is incorrect. All the NBFCs are allowed to collect a time as well as a demand deposit. This is also incorrect. The NBFCs are generally classified into two categories: demand accepting, non-demand collecting. Demand collecting, non-demand collecting. If you're a demand collecting NBFC, of course, you'll have to take the certification from RBI. Once you're allowed to collect deposits, you're allowed to collect only the time deposits, not the demand deposits. And within the time deposits, again, the restriction is 12 months to 60-month time deposits. Right? So third statement is also incorrect. Right option for the question will be option D, none of the three statements. Let me move on to the next article now. LIC board approves 1:1 bonus share issue. What are the important points? Multiple companies in the past, that is in the last 2 years itself, have announced bonus issue of shares. What is the basic idea? If any company announces a bonus issue of 1:1, it simply means for every one share that you are holding, now the company will be issuing one additional share. Very simple. For every one share that you're holding, the company will be issuing one more share. This is called as a bonus issue. This is bonus issue. Now, is it compulsory that the bonus issue has to be always 1:1? No. It is entirely up to the company to issue the bonus shares in this particular ratio. If they want to issue one share for every 10 shares that you're holding, they can do that. For every one share that you're holding, they can issue one share. So it is entirely the prerogative of the company to decide what will be the ratio of bonus issues that they want to do. This is point number one. Point number two, what generally happens in a bonus issue? If I'm a shareholder, let's say right now I'm holding 10 shares. Now, because the bonus issue is 1:1, I'm holding 10 shares. Now 10 more shares, new shares will be issued free of cost. Free of cost in the sense, I do not have to pay any money to the company. So free of cost, these particular 10 shares will be issued to me. But a very important point to note here. These particular 10 shares essentially will have certain value. They will have certain value. At certain price, they will be issued in the market. But what is the meaning of the price here if the shareholder doesn't pay any money? Generally, the practice that is followed is the company will have certain reserves. The company will have certain reserves. That is, let's say the company has earned a certain amount of profit. Some part of the profits remains undistributed. It is with the company. Now, these reserves, part of it will be transferred into the capital account, that is the equity account of the company. From the reserves account, this money will be transferred like this. And the issues of the shares, the bonus issue, will be conducted by the company. So it is an accounting mechanism. In simple terms, the financing year or the finance associated, money associated with the shares, bonus issues, it is an accounting concept. Money will be transferred within the books of the company from one side or from one account to another account. But the shareholder doesn't pay any money. Shareholder will not pay any money. Next important point. Once the bonus issues will happen, what is the likely impact? The number of shares in the market will increase. The total number of shares of the company will increase. And that is expected to have an impact on the market prices of the share. Will the government impose any kind of a tax when the bonus issues is done? The government simply says, when the bonus issue is done, it will not impose any kind of a tax on the shareholder. But if the shareholder uses the shares to make certain gains in the market, then obviously the government will impose a tax and collect it. Right, so these are certain very important points. Now let's look at the case of Life Insurance Corporation. This entity until very recently was entirely owned by Government of India. But it has been listed by the government in the year 2022. 96.5% of the ownership is still with the government. This entity now has announced a bonus issue of 1:1. Essentially, this will lead to the overall capital or equity capital held by the company. Equity capital held by the company, which was until now 6,324.99 crore rupees, to double. 1:1 means twice the number of shares. It will double to 12,649.99 crore rupees. Right? So these are certain very important points associated with the announcement of 1:1 bonus issue of shares announced by LIC. Let me move on now. Based on this, let's solve a question. Consider the following statements regarding the bonus issues of shares. the percentage ownership or stake of the shareholder will increase. Just think of it. Imagine out of 100 shares, you had 10 shares until now, which means you had a ownership of how much? 10%. Now the company will announce 1:1 bonus issues of the shares, which means 100 more shares will be issued. And for the 10 shares you are having, you will be given 10 more additional shares. So out of 200 shares, you are having 20 shares. Will the stake or the percentage ownership change? Absolutely no. Right? So even if the company goes for a bonus issue, the percentage or the stake does not change. The shareholders will have to pay a discounted price for these particular shares. That is also incorrect. The bonus issues are taxed when the shareholders get them. That is, get the shares. When the shareholders will get the shares, the government will impose a tax. Incorrect. All the three statements are incorrect. Right option for the question is option D. Let's move on to the next article. 15th Finance Commission period has set a record with 94.9% funds release for rural bodies. What are the important points? Right now, the period of implementation is for the 16th Finance Commission. 2026 to 31, the 5-year duration comes under the 16th Finance Commission tenure. This is point number 1. Point number 2, from 21 to 26, 15th FC was implemented. One of the important recommendations of the 15th FC, I'm saying one of the important recommendations of the 15th FC was the funds to be allocated, the grants that were allocated for rural bodies. For rural bodies. First and foremost, please remember, every finance commission has not recommended the grants or the funds for the rural bodies. It was only from the 10th Finance Commission. That's a reason in the table you will see that the funds are, right, how much was the allocation announced and how much of the funds have gone to the rural local bodies or rural bodies, that comparison has been provided. So only from the 10th Finance Commission, the recommendations have been provided for the grants to be allocated to the rural bodies. Now, what is the importance of this particular article? If you just observe the table, this is the table I'm talking about. If you just observe the table, you will realize one thing. Different finance commissions have announced different allocation of grants for the local bodies or rural bodies. But the 15th Finance Commission, the allocation has been very high, but more importantly, most of the funds that were recommended for giving grants to the rural bodies, most of the funds have been given to the local bodies. How much? 95% of the funds that were allocated in the form of a recommendation have been given by the center to the local bodies. 95%. It is the highest since the 10th Finance Commission recommendations were implemented. Right? The reason behind this is very simple. Whenever the funds are allocated, a lot of these particular funds are connected to the performance, certain performance parameters of the local bodies. So based on the performance, more and more funds have been released by the central government. In fact, the 16th Finance Commission also has recommended huge amount of grant to the local bodies, and the total amount of grant that has been recommended is 4.35 lakh crore rupees. 4.35 lakh crore rupees. Part of it or some of it is based on the performance, generally referred to as a performance based grant. Right? So these are certain very important points, and this is important for a simple reason. More the funds will go to the rural bodies, they will be able to use these particular funds for implementation of various projects that will help in the improvement of the local bodies. Now, next article, bonus for farmers. There is a lot of discussion in the context of this. Let's understand the points here. The central government, whenever the cultivation cycle happens, before the sowing season starts, the center announces MSP, minimum support price. And this announcement is based on the recommendation that is provided by the Commission for Agriculture Cost and Prices. So CACP will recommend, Cabinet Committee on Economic Affairs will announce, decide and announce. Now, in addition to the central government announcing MSP, the states also announce bonus. In addition to the center announcing MSP, the states also announce bonus. And what is the meaning of it? Let's say the center has announced an MSP of 1000, the states have announced a bonus of 200. Now the farmer in the state will sell this crop, he will get or she will get 1000 rupee MSP plus 200 rupee bonus. Right? So this is essentially the model of MSP as well as bonus. The center has sent a letter to all the states. And the argument of the central government is, once the state is announcing a bonus and this particular bonus is higher for certain crops, the farmer would be cultivating more and more of this particular crop. Right? Because the farmers also want to earn more money. Now the problem is, when these particular crops are cultivated more and more, supply of the crop in the market increases. And it is not very difficult to understand what kind of crops I'm talking about. I'm talking about paddy and wheat. Paddy and wheat. So the cultivation, production, supply of paddy and wheat increases. One side, it will impose more restriction, more compulsion on the government to procure more and more of these particular crops. They will have to procure. Right? Which means the financials that are associated, the MSP that is paid, the expenditure to maintain these particular stocks, etc., that burden on the government, which is done through Food Corporation of India, will also increase. In addition to this, the problem is multifold here. Multifold in the sense, the farmers will sell or cultivate more of this particular crop, that is cereals such as paddy and wheat, which means the land that will be used for cultivation of pulses, oil seeds, etc. will be lower. Sufficient quantity of land will not be used for these kind of cultivation of the agriculture commodities. And if the production of these becomes lower, the demand is always there in India. The demand for these crops is always there, but the supply is lower. As a result of this, the imports of oil seeds, imports of pulses in India will tend to rise up. And historically, India, despite being the largest producer of pulses, has also remained the largest importer of pulses. So looking at all of this, the government of India has sent a letter to the states asking the states to basically review their bonus policy. Review the bonus policy in the context of these kind of crops, so that the imbalance is not created. And this particular imbalance will lead to complications in the sense the supply demand imbalances, imports, right, increasing into the domestic market. Rather than being self-reliant, we are continuously importing these particular crops. So based on this particular argument, to review this particular policy, the center has sent a letter to the states. And that actually led to frictions between the state of Tamil Nadu or the government of Tamil Nadu as well as the government of India. So these are certain important points. Next, the last article in today's discussion. RBI plans new measures to combat digital payment frauds. Now, what is the proposal? I am saying this is a proposal. The Reserve Bank of India has found that with adoption of more and more digital payment tools, digital payment frauds are also increasing. For example, there is a concept of authorized push payment. Many of the times, the people who are not digitally literate, they do not have digital literacy, sufficient knowledge of how the payment operations happens, etc. They will be sent a QR code. They'll say, scan the QR code, right? You will get a message. You say you accept it, right? And then the money will be credited. I'm repeating it. They will be told that the money will be credited into your account. And because these are very innocent people, right? Old people, etc. or old age people, right? They do not understand how the operations happens or how the digital payments are transferred, etc. They will fall into trap, right? So a lot of digital frauds are taking place, and according to the RBI, those particular transactions where the value is more than 10,000, the digital frauds where the value is more than 10,000 accounts for 98.5% of the total value of digital fraud transactions. 98.5% of total value by total value of digital fraud transactions. So Reserve Bank of India is targeting this particular number, 10,000 plus transaction. So what are the proposals? If you want to transfer the funds account to account, right? Account to account. Of course, there are certain types of exemptions for this. For example, merchant accounts, right? Authorized accounts, etc. Right? Those are exempted from these kind of restriction. But generally, if you want to transfer the funds from one account to another account, and if the value is more than 10,000 rupees, then there will be proposal right now, a 1 hour wait time. There will be 1 hour wait time. That is, right now the fund transfer is immediate. Let's say I'm using UPI to transfer funds to you. The fund transfer is immediate. But if this is being implemented, essentially the funds will be transferred from my account. They will be with the bank for 1 hour, and then it will be transferred into your account. Right? What is the reason behind it? If the bank basically finds a suspicious activity in this transfer, they will raise a flag. If I have transferred, but after 5 minutes I've realized I should not have transferred, it's a digital fraud, etc., I can cancel the transaction. This is the first very important proposal. Second very important proposal, there are certain, right, customers, right, customers who are very old, right, let's say above 60 years, above 70 years, 80 years, etc., or people with disabilities, etc. These are vulnerable customers, vulnerable groups. A lot of times they might fall prey to digital frauds. In such cases, if the transfer is more than 50,000 rupees, if the transfer is more than 50,000, in addition to the customer, there is an additional verification requirement. The verification has to be done by one more person, a trusted person of this, right, customer. So their verification will also be done. That is, their approval will also be provided. Only then the transfer can happen. This is the second very important point. Third very important point, in the digital frauds, there are certain accounts which will be used by these fraudsters. And these accounts, they'll keep on collecting the money, right? By cheating others, the money will be transferred into this kind of an account, mule accounts. The RBI now simply says, if the accounts are receiving more than 25 lakh rupees per annum, there will be restrictions imposed on this. More, right, let's say the banks will be more worried or will be looking into these particular accounts which are receiving lot of transfers, right? They will be looking into these accounts, right? And the receiver has to provide lot of documentation if more funds have to be received. This is another restriction. And one more very important proposal is a kill switch. It is being used in multiple other countries. A kill switch will be introduced. What is the basic idea of a kill switch? By utilizing the kill switch, the customer can disable all the digital transactions or all the tools that can be used to transfer digital transactions. So one switch to basically bar all the digital transaction, right, utilities or the tools. So this is also being proposed. So these are some of the proposals which have been put forward by Reserve Bank of India, using which RBI wants to contain the digital payment frauds which are taking place in India. So these are the various articles, concepts, as well as the questions I wanted to discuss with you people in today's session. If you have liked the session, do not forget to hit the like button. If you're yet to join Unacademy IAS YouTube channel, kindly do it right now. Thank you. Have a great day.